Welcome back to the deep dive.
Good to be here.
So today we're digging into something quite complex, actually. It revolves around Bed Bath & Beyond, BBBY.
Ah, right. Yeah, they've certainly been making headlines.
Exactly. And this came about because one of you sent us a link to a YouTube video. It's by Rantz, called BBBY Terminal Decline Connect the Dots Part 7.
Okay, I think I've seen parts of that series float around. Connect the dots, huh?
Yeah, and that's really our mission today, to kind of look beyond the standard financial reporting on BBBY's struggles.
And specifically trace the connections the video draws between BBBY and the private equity firm, Apollo Global Management.
Right. Is there something else going on, something beneath the surface? That's what we want to explore.
So the video is basically suggesting a pattern, maybe involving private equity tactics, things like leverage buyouts, and how companies can end up distressed.
Precisely. It questions if BBBY's situation is just bad luck or bad management, or if it fits into a bigger playbook used by certain financial players.
Okay. Sounds like a deep dive indeed. We'll try and break it down, keep the jargon, manageable.
Absolutely. Okay, so where's the video start? It dives into leveraged buyouts, LBOs.
Right. The classic LBO. You buy a company, but you use a lot of borrowed money to do it.
And often, the company you just bought, its own assets are used as the collateral for those loans.
Exactly. Now, the video argues that this isn't always just straightforward financing. Piling on debt, especially when getting loans, is generally hard.
Like maybe now?
Yeah, potentially. The argument is that this could be a deliberate tactic, a way to push a company towards financial trouble, towards distress.
Interesting. And it brings up this idea of a wider distress cycle, suggesting the current economy might fuel this, maybe even through 2025.
That the economic conditions themselves make highly leveraged companies extra vulnerable. It's like adding weight when you're already struggling to run.
And they throw in a historical callback, too, right? To Drexel, Burnham, Lambert.
Yeah, back to the 80s and the rise of junk bonds, those high-yield, high-risk bonds that really fueled the LBO boom back then.
So it's painting a picture of a financial strategy that's been around, can be risky, and might be particularly relevant right now.
That seems to be the setup. The strategy exists, the conditions might be right for it. Now let's look at BBBY specifically.
Okay, and this is where it gets intricate. The video zooms in on the Bed Bath & Beyond board of directors, trying to connect them to Apollo.
Right. Let's start with Harriet Edelman. She joined the BBBY board in 2019.
Okay.
The video notes she's also vice chairman at Emigrant Bank, which is chaired by Howard Milstein.
Still following. Where's the Apollo link?
It comes through another person on the Emigrant Bank board, a guy named Richard Alexander.
Uh-huh.
He's the chief technology officer at a company called Cerberus. And Cerberus, according to the video, has done deals directly with Apollo.
What kind of deals?
Selling off companies like ABC Technologies and Covis Pharma to Apollo, apparently.
Ah, I see. So it's not Edelman herself working for Apollo, but someone she serves on a board with. His company has direct business dealings with Apollo.
Exactly. It's that kind of layered connection, a potential channel maybe for information or influence, even indirectly.
It definitely shows how these corporate worlds can overlap in unexpected ways.
It really does. It's rarely just one direct line. It's more like a web of relationships. And the question the video raises is, do these indirect ties matter in the boardroom?
And the web keeps expanding with Edelman. She's also a director at Assurant, the insurance company.
Right. And on Assurance board, Lawrence V. Jackson. He used to be at New Mountain Capital.
Another private equity firm.
Yep. And New Mountain Capital.
Oh.
Well, it has links back to Apollo, too.
That's so.
A former senior partner at Apollo Management, Sam Oz, founded a firm called Mountain Capital Partners.
Okay.
And Mountain Capital Partners also seems to do deals involving Apollo. The video mentions a pipeline company taken private by New Mountain Capital, which Apollo later bid on.
Wow.
And also a troubled energy company buyout offered by this Sam Oz guy through his firm.
So again, it's these interwoven relationships between firms and the people who move between them.
Precisely. People move around in private equity. Firms sometimes co-invest or compete on deals.
Yeah.
The video is suggesting these links, past and present, could create subtle channels influencing BBBY via Edelman's network.
There's even a GameStop connection thrown in there.
Yeah, kind of wild.
Yeah.
Jay Baxter Carter, who's also on the Assurant board with Edelman. He was previously on the GameStop board through a group called NeoStar Retail Group.
And didn't Apollo try to buy GameStop at one point?
They did. Apollo Global, along with Sycamore Partners, put in a bid for GameStop, previously.
So, someone connected to a past Apollo target is now in Edelman's network on the Assurant board, while Edelman is on the BBBY board.
It's another layer. The video presents it as part of a pattern, individuals connected to Apollo's sphere of interest appearing in BBBY's orbit.
But the video seems to land on something it considers a real gotcha moment with Edelman, right?
Yeah, this one's interesting. Edelman worked at Avon for a long time, like 29 years.
Okay. Avon products.
And get this. From 1990 to 1997, Avon's main headquarters was in the exact same building as Apollo Global Management.
Seriously. 9 West 57th Street in Manhattan.
That's the one. So for 7 years, Edelman, presumably in a senior role at Avon, is working day in, day out in the same physical building as the leadership of Apollo Leon Black, Mark Rowan, those guys.
Huh. Proximity isn't proof of anything concrete, but...
But it certainly suggests they were swimming in the same pond, professionally speaking, for a long time. The video emphasizes this, asking what kind of relationships might have formed back then.
Okay, moving on. Another BBBY director highlighted is Sue Gove.
Right. Now, Gove's connection is maybe more direct, or at least the timing is suggestive.
How so?
She was appointed as a director at Fresh Market Inc., the grocery chain,
Yeah.
after Apollo bought it.
Okay, so she was on the board of an Apollo-owned company.
Yes. And then later, she was selected to be a director at Bed Bath & Beyond.
Ah. The video implies Apollo placed her at Fresh Market, and then she moved over to BBBY.
That's the strong implication the video makes. That maybe Apollo identifies people, places them in companies they control, and those people might then move into roles at other companies of interest.
Right, potentially carrying, certain perspectives or allegiances.
That seems to be the argument.
Okay, who else? Carol Flayton.
Yes, Carol Flayton. Her link comes through EP Energy Corps, where she was previously a board member.
And EP Energy has an Apollo history.
Oh, yeah.
Yeah.
A significant one. Apollo, along with Elliott Management, tried to save EP Energy's stake during bankruptcy.
Did it work?
Well, EP Energy did emerge from Chapter 11 bankruptcy back in 2020, but an Apollo-backed equity offering failed later on. And importantly, EP Energy's original bankruptcy filing happened after Apollo took it private in a leveraged buyout in 2012.
So Apollo did an LBO, the company ended up in bankruptcy, Apollo tried to get involved in the restructuring, and Flayton was on the board during some of this?
Exactly. The video points this out. Her experience is deeply tied to a company that went through the LBO distressed bankruptcy cycle, with Apollo heavily involved.
And her later appointment to the BBBY board raises questions, given that history.
It certainly fits the narrative the video is building. Plus, she also worked at Alex Partners and Lazard, big names in restructuring and M&A.
Alex Partners, didn't that name come up earlier?
Sort of. The video mentions a Holly Edelman, no relation to Harriet, presumably, who's managing director at Alex Partners. And the video says she's now CFO for a parent. Well, the speaker kind of fumbles, saying implicitly connected to Apollo, maybe initially starting to say from Bed Bath & Beyond, but corrects themselves.
So another Alex Partners connection, possibly linked to the Apollo sphere. That firm seems to be a recurring theme.
It does, and as the video points out later, Alex Partners is active in the whole distressed investing world. The implication seems to be that people from these advisory firms often end up in key roles at companies facing distress.
Right. And finally, there's a board member named Yeager.
Yeah, just mentioned briefly. Tied to Ernst & Young, EY, the big auditing firm.
And the video points out EY's own issues.
Quickly, yeah. Mentions past penalties, audit failures. The suggestion seems to be maybe the financial oversight at BBBY isn't as robust as it could be, which is, concerning for a struggling company.
Okay, so that covers the board members. A lot of connections, some direct, some more networked.
Definitely a web. And then the video pulls back a bit, looks at the bigger picture, talks about the Wharton Restructuring and Distressed Investments Club.
Sounds like a niche group.
Very niche, very influential, an annual conference. You get investors who specialize in buying debt of troubled companies, hedge funds, lawyers. Even bankruptcy judges attend.
Bankruptcy judges, really?
Right. Yep. And in the year the video focuses on, the keynote speaker, John Zito, from Apollo Global Management.
Ah. So Apollo is literally keynoting the main event for the distressed investing industry.
Seems so. And checking the sponsors for that conference. Kirkland & Ellis, huge law firm, does tons of bankruptcy work.
Yep.
And Alex Partners again.
There they are. So the investors, the lawyers, the advisors, the private equity giants like Apollo, they're all meeting, networking.
It paints a picture of a very tight-knit ecosystem where the major players all know each other, sponsor each other's events.
And the presence of bankruptcy judges. That feels a bit, I don't know, close.
The video definitely highlights that. It even mentions One judge, Robert Drain, was previously a partner at Paul Weiss, another law firm heavily involved in these kinds of cases. It suggests potentially cozy relationships.
You're right. It shows how this whole world operates, maybe outside of public view, mostly.
And Apollo is positioned right at the center of it, at least according to this conference setup.
So what about the actual strategies? How do these distressed investors operate? The video includes interviews.
Yeah, excerpts from a couple of industry figures. First, Jason Mudrick from Mudrick Capital.
What does he say?
He talks about things like loose covenants. Those are like less strict rules in loan agreements.
Giving companies more rope, maybe too much rope.
Could be. He also mentions creative financial sponsors and how they might treat different groups of creditors differently to get liquidity, to get cash.
So playing favorites among the lenders.
Essentially, yeah. And he calls the current time, this economic cycle, maybe the mother of all cycles for distressed investing.
Wow. So he sees massive opportunity in corporate distress right now.
That's the clear message.
What?
It suggests there are established ways to profit from struggling companies.
Yeah.
And the current environment is right for it.
Okay, who else? Eric Zinterhofer.
Yes, from Searchlight Capital. And here's a key detail. He's a former partner at Apollo.
Ah, an insider's perspective, potentially.
Exactly. He talks about being mentored at Apollo by figures like Rob Katz and Mark Rowan. He emphasizes the opportunities that pop up when the economy is distressed.
What was Searchlight's play during the pandemic, for example?
He says they focused on credit investments, initially hedged, cautious, but then pivoted to buying into, quote, high-quality companies that were just hit hard by the crisis.
Interesting. Any specific tool is mentioned?
Yeah, he mentions using total return swaps, TRS, with banks.
Right. Those complex derivatives, a way to get exposure without direct ownership sometimes.
And he also mentions partnering up with other former Apollo people on deals.
So that Apollo network is clearly still very active, even among alumni who've started their own firms.
It really reinforces that idea of a lasting network and shared approaches originating from Apollo.
The video then makes a distinction, right, between paper and operational approaches.
Yes, this is important. Paper approach is more about financial maneuvering, like swapping debt for equity ownership. Purely financial transactions.
Okay. And operational.
That's more hands-on, getting involved in the company's management, its strategy, trying to actively restructure the business itself.
And where does the video place Apollo on that spectrum?
It characterizes Apollo as being more operational.
Meaning they're not just trading the debt, they might be looking to get inside the company and influence its direction.
That's the implication. Which, if true, is crucial for understanding their potential endgame with a company like BBBY. It suggests a more active role in reshaping the company, maybe breaking it up, selling parts, installing management.
Not just waiting for a debt payout.
Exactly. It implies a deeper level of involvement and control could be the goal.
Okay, so bringing it back to BBBY specifically, how does the video describe their situation at the time it was made?
It mentions reports that freight, deliveries to stores were way down, or if they were happening, they were much more expensive.
Signs of cash flow problems, maybe trouble with suppliers.
That's usually what that indicates, yeah. Potential inventory issues, capital constraints, classic signs of distress.
And there was skepticism about them raising money.
Yeah, the video questions whether they could realistically do a public stock offering, given how low the share price was. You'd have to issue so many shares, it would massively dilute existing owners.
Right. So the overall conclusion of the video creator is
pretty blunt. They conclude BBBY is essentially infiltrated by people connected to Apollo.
Implying the outcome is almost predetermined.
That seems to be the strong suggestion, that the company's path is being steered by these connected individuals towards an end that benefits the distressed investors, potentially Apollo, rather than, say, maximizing value for existing shareholders in the traditional sense.
Okay, so if we wrap all this up, the deep dive, based on this video, really highlights a network.
A network of people with ties, direct or indirect, back to Apollo Global Management, who are in key roles at BBBY on the board, potentially influencing decisions.
And this is all happening against the backdrop of how private equity, particularly distressed debt investors, operate, using leverage, navigating distress cycles.
Within that whole interconnected ecosystem, we talked about the conferences, the law firms, the advisory firms like AlixPartners. It all seems linked.
So the implication for someone trying to understand what's happening with BBBY is a team. Don't just look at the surface news.
Exactly. Consider the possibility that the company's trajectory is being shaped by the specific goals and strategies of these distressed investing players who might have very different incentives than the average investor.
It definitely gives you a different lens through which to view the situation.
It does. And maybe a provocative thought to leave people with is, what are the incentives for a distressed debt investor like Apollo, especially one known for an operational approach?
Right. If they gain control or significant influence, what does maximizing their return look like? Does it align with saving the company as it currently exists? Or does it mean something else entirely like restructuring, asset sales, or even a controlled bankruptcy?
Those are the tough questions this perspective raises. It encourages you to really scrutinize who's involved and what their track record suggests their playbook might be.
Definitely food for thought. This dive really underscores that need to look beyond the headlines and understand the sometimes hidden forces at play in corporate finance and restructuring.
Absolutely. It's a reminder that the world of high finance, especially around distressed companies, can be incredibly complex and driven by relationships and strategies that aren't always immediately apparent.